Hello, this is Right Side Trader. Today is May 18th, 2025, and this is a quick look at how I go about placing this zero-day option trade. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. Even though I'm looking at the live, I'm not looking at the live market. This is Sunday, so you will see 1 instead of 0 on the zero-day options and all. And this is definitely not a trade recommendation. This trade is very, they talk as is a safe trade, but if this trade goes bad against you, you can be giving back the credit and whatever credit, you can give back that credit that you receive and ever how much you thought you had received before you actually really get out of this trade. This can be a very, very big loss trade. So this is definitely not for everyone. But I'm going to show you what I do when I place this trade. And if you watch my weekly trade review, you'll see at times what I do when this trade goes bad and all. But right now, it's all about the opening. All right, I'm going to be looking at the zero-day options, although it's going to show a 1 today. Some of the things that I do, I check the future market, I check the VIX, then I look at my delta, I look at my open interest, I look at my volume, then I actually place the trade. And then I get filled. And then if I get filled, I'll show you how I go about closing the trade. So let's jump right over to the platform and let's see what we're looking at here. Let's go to the chart first. Let's go to the future market. When I look at, I'm looking at the future market, and I'm looking at, that's the wrong one. My future market is here. When I'm looking at the future market, I'm just kind of looking at the pre-night stuff and see what happens, see if something happened crazy. You know, did we have a big move up in the market? You know, did we have a big move down in the market? Or is the market just kind of going sideways? You know, and a lot of the times the market is going sideways. If the market is pretty calm, this is going to be a pretty good day probably for this trade. You don't have to worry about it trending one way or the other. But then the next thing that I look at pretty quickly after that, I go and take a quick look at the VIX and see what the VIX is doing. So let's switch over to the VIX chart. I'll take a quick look at the VIX, see if the VIX is doing something crazy. Something crazy meaning as, is it making a strong move to the upside? I mean, the market is making a strong move to the downside. Is it making a strong, did it gap down? If it gapped down, that means the market actually probably popped. So again, based on your trading experience and your trading savvy, what do you do? Do you actually place this trade, or you decide not to place this trade if the market has done something silly? Well, not silly. It's done something, you know, out of the ordinary. It happens. Is it a good day to be placing this trade when the VIX is actually doing something kind of out of the norm? It's not just basing sideways or slowly drifting down or slowly drifting back to the upside, you know, and it very seldom slowly drifts back to the upside. But that's what you're looking at. You're looking at the VIX to see how it is reacting, and is it going to be a good day for you to place that, based on your trading experience, is it going to be a good day for you to place that trade or not, and all. Then after I've looked at all that, I jump over to my option chain. Just go right over to the option chain and I get ready to place the trade. Like I say, we'll be looking at day 1 options, and when I say day 1 options instead of 0 day, right now normally this would be a 0 here, but right now it's showing a 1 and all. So that means it's another day before these options actually expire and all. So on the 19th, which is Monday, and that's what you would see. So make sure that. Then we really don't pay. I don't pay that much attention to the strikes. The next thing I'm really looking at is delta. I'm looking at my delta. I got to go find out what this is, the put side. Looking at delta on the put side, and then you have the call side, and I'm looking at delta on the call side and all. I usually like starting off on the put side. That's just preferences. It doesn't really matter where you start at and all, but that's where I start at. So now I'm going looking for that 20 delta, and that 20 delta, I come down my delta thing, and that's my 20 delta here that's highlighted already, and also that's my 20 delta. And I'm gonna let's see where my 20 delta is at on the put side also. On the put side, we have a 21 and we have a 18. Normally, I'm gonna go to the 18 and actually place this trade. I'd rather be a little further out and not even thinking about what direction the market is going to actually be going. It's all just based on the delta, and I'm not going to sway it one side or the other at this time. Not at this time. I just want to place the trade the way it's been tested to actually work. So we're going to start off with this 20 delta on the put side, and then we're going to be talking about 10 wide. When we're talking about 10 wide, we can look at that. Since these are $5 strikes, the difference between these strikes when you're looking at strikes, is $5. And since I'm doing a 10-watt credit spread, I have on the put side, I sell high and I buy back low. So that's what I do on the put side. Then on the call side, I look at my strike, I look at my delta, and since I said I'm going to go at the 18 delta, so I'm looking at this 18 delta. We got 5 wide strikes again. And that's the thing, you need to be careful about this too. Because again, if the market's done something crazy overnight, it can be a gapped up, a gap down. Usually when it gaps up and all, you may not have 5 wide strikes if you was planning on doing a 5 wide type trade. It may only have 10 wide. If it gapped in either direction, you may not have strikes created for what you had planned to do. So be careful about that when you're looking at, make sure the strikes that you're actually trying to trade. Don't just look over here at your delta and stuff and say, I need to do the next delta, 2 deltas down, and I'll verify the strikes that you're actually playing. And on the call side here, we're going to be doing that. And then on this time, I can just go here, and I know that. And now the strike that I'm looking at, I'm going to be looking at a 59.90 by 6,000 on the call side, and I'm going to be looking at a 58.90, 58.80 on the put side. Now, after I've identified all that, I'm kind of tiptoeing through it and all. I call it tiptoeing through it. Might be kind of fast with some. But 58.90 on this platform, I can do a right click on the bid. I can say sell, and I can say iron condor. Now, when this comes up, since I was looking at the put side, it's bringing up the put that I was on, and it's bringing up a call just above that on the opposite side. So you got to be careful about this, and that's why we looked at in the beginning. We looked at what was our strikes on the call side, what was our strikes on the put side. Because here we're going to have to make an adjustment, and on this adjustment on the put side, since we want to be 10 wide, we're selling at a 58.90. That means we have to be 10 points lower. So we got to go to a 58.80, right? Boom. 10 wide, got to be lower. Sell high, buy back lower on the put side. On the call side, we had said it was like 59.90 and 6,000. And also, let's go over here, and we should be able to see that now. And here is a 59.90, the one that we want to sell. And we're going to pay attention to this. This minus sign indicates the one that you're actually selling. So 59.90, almost 100 points different than what we're looking at there. So let's go here to 59.90, and then the one that we're going to be buying on the call side, you sell low and you have to buy back higher. So we're going to 6,000 here. And now we end up with a credit, a $2.70 credit. We verify that looks okay. Because again, if it comes up with something crazy and all that doesn't make sense, and all, your credit normally is, I would say, I was looking to give $1.50 on this trade when I first started doing it. And I've been getting close around $3 on this trade. So again, just make sure it looks ideal, what you think what this should be, and all. If it's something crazy like $10, or if it's something it's saying a debit, you've done something wrong. And then just go back to your numbers and verify that your numbers are correct, and correct your numbers as needed. But once I see everything is here okay, I go ahead and do a confirm and send. I look at my, and I did 10 contracts. Let me edit. And again, if you made a mistake here and you see something wrong on this particular platform, I can just do an edit, and I can adjust it as needed. And I really just want to, since this is demonstration only, just put it down at 1 contract and all. 1 contract, the numbers are a whole lot easier too. So we're receiving a $2.70 credit. Everything on when it comes to these options is 100 times, and also 100 times meaning we're receiving $270 on this trade minus any commissions. So when we do a confirm and send, that's what we expect to see. Our maximum profit on this trade is $270. Our maximum loss on this trade is $730 minus any commissions and all. So the maximum credit that we actually really going to receive after commissions is $2.65. $265.32, and all. So that's but that maximum loss is still the same. It doesn't change. That just lets you let this thing expire, and it expires out of the in the money. You can only lose on one side. So again, it doesn't matter if the market drops crazy on you or go up crazy on you. You can end up with this maximum loss. That's the scary thing for me. That's the thing that you have to be careful about with this trade. You see this trade going bad on you. It's better to try to understand what you're doing and what you're looking at, and what is just going to be a small loss for you. Me, on this trade, it's usually like I say, I don't want to lose any more than $200 on the trade. I'm only making $270 on the trade, a little bit over 200. So I don't want to lose any more. So that means this thing can go almost twice against. It can go where I'm giving back the money plus an additional $200 on this trade. So that's a pretty big loss to me in my book, But that's what you're looking at when a trade goes that bad against you, So that's what you're looking at, and that's what you got to be thinking about when it comes to the loss. And maybe I'll do something on that, to kind of show those numbers and how it kind of looks and all that when you're actually trading and doing this trade. But that's that. So that's what we see here now. And now once I got that and all this looks good, I just go ahead and say send. $2.70, and we're going to just work with the $2.70 times 0.75. It's going to be the amount that I want to close this trade for, to receive the difference between the credit and what I close it for. So the difference between the credit that I received was $2.70, and right now it said if at 25% I should close this trade for $2.02. I'll close it for $2 and all. So let's minimize this, and the way I do, as soon as my trade is executed, this credit trade is executed, I go ahead and right click on that order. That order will be still sitting out there. It's going to say field. It'll be a field order, and I can say opposite order, create opposite order. So I usually click on that opposite order, I unlock it, I change it to my number that I want to get out at, which in this case is $2. So I set it for $2. I go ahead and do a confirm and send. I do a confirm and make sure that my numbers look correct, and my numbers do look correct here. My maximum profit on this trade, it says 800, which is not true. And if it was a standalone trade, yes, my maximum profit would be $800. And the maximum loss on this trade is not true, and all because this is the opposite. This is an opposite order for a credit trade that we have out there. But if it was a standalone trade, this would be the maximum loss on this trade, which is $200, which is less than the maximum loss that we probably would have if we was doing this trade normal. Don't want to go there. But the maximum loss on this trade right now is it says $200. But all we're looking to make now is $70 on this trade. So I would actually go ahead and do a confirm, and since I did a confirm, I can go ahead and send this out now. But in the live account, in live trading, you wait, and unless you can have an order send order type option on your platform, you have one order execute, then it execute this other order for you to get it out there right away. That's one way of doing this. But the way I do it on this particular platform and on most of on the other platforms that I'm on, I usually wait to one fill, and then I send it. I had this other one already kind of like staged, then I send it right away. And that's pretty much it. Anything else that I need to look at? That's all I really want to do. There's some other things that I do. I think I put videos out there, the stuff that I do around on the chart where I put my sell lines and all that kind of stuff and put my information where I can see it. But that's pretty much it when it comes to placing the trade, getting set up to close the trade, and all that we need to do. Other than that, I hope this is being helpful for some. I know I went through it pretty quick. I've been having internet issues. I'm trying to get it done before my internet starts dropping in and out. And if you have any questions, please just put them out there, and I'll try to get to them as soon as I can. But I hope you guys had a great weekend. Hope you guys have a great week coming up, and make that money. Talk to you later. Have a good one. Bye.